morning, class. Welcome to Homeroom with Unk and Market Monk. Morning, P. How was your week?
Man, Vasily was pretty good. That I didn't have a huge position, but when it moves like that, it sort of seems bigger than it was. Just because the gains are so big. But yeah, it was pretty clean read, and just one of many that I think's capable of doing something like that. So we've been on it a long time. It was nice to have some follow through on the work. Hit app a few times. Uh, Crypto, kind of the usual there. But I mean, now the biggest wins have been the park and wait, buy around levels, and it's been working out.
Yeah, big DCA market for me. I'm with you on that. The grinder, it's more. Different stories, I guess. Besides, I guess we met at the FSLY um,
Yeah,
with a small position. Let's just get out there with that. I'll wrap back around to that. But man, the Clorox did good last week. The Cops done well. The T-Mobile didn't get a lot of it because we were DCA until we got to the number, but got some of it and did tap last week as well. The boring shit. And you kind of
yeah,
nailed that. And people, didn't get the 20-40% days out of that. But I've been with you long enough to kind of know you're not. That's not how that works. If you get 20 over a month of a grind, that's the move. That's a
yeah,
great trade. And you're not
yeah,
going
yeah,
to get knifed out on a lot of stuff like that. So most of the good action for me was there last week. FSLY to end the week. Other than that, slower DCA days. Kind of just wrote big on the wall this week, for lack of better terms. The three candles, bud. Just like
yeah.
there's a reason for it. So slowing the game down a little bit. Little couple rounds of golf this week. But circle right back around to the FSLY, a good starting spot for us. Levels are real. First of all, we always start there, and when the flow lines up with the levels, you used to usually want to take some of that trade. And
Yeah.
even if it's 100 shares, you kind of do the math, and yeah, sometimes it's only going to be 150 bucks, and sometimes it's going to be 700 or 800 bucks. Depends on how you play it, and um, just the trade lined up good with the levels. That's the main thing that kept me around in it. With some shares under 10 was just the thesis. Um,
Yeah.
just because of the flow stayed in there, and then making my level pretty happy that it's continuing on even better. If you guys are still in it, good job, I guess. But
Yeah.
my levels are defined. I know where the flow is at, and on to the next one.
Yeah, and it's one of those that I think easily could pop back up for us, but you a move like that, you have to give it time to reestablish what they're doing. And the off the initial pop, they started selling the 14 puts. Well, let's say start selling the 1750 puts, and I see it kind of prove itself. I probably wouldn't get back into that one, but there have been many that get that euphoric move, and then all of a sudden it quiets back down, and we get interested again. Open did that, and that was one where we caught that initial move, and then I've gone back to it several times. Hims has been and will be like that, but it's always remarkable to me that you've got Fastly accounts popping up
Yeah.
now, like get into this and here's how you trade this particular setup. When a lot of times like you don't the best way to trade that setup is to not do it. You just gotta you gotta move on. But finding the next thing, it takes a little bit more work than just seeing what moved and trying to be shot caller within this new range it opened up. So, um, I see a lot of that
It's
going
that
on right
riding the
now.
bull. Yeah, they ride the bull. They don't find like the young calf.
Right? Yeah.
If you were, it's like I guess horse racing would be a little better analogy, man. You got to find that proper breed real early on. You know, that's how you make money in it. You don't go to the track. You know, you turn 100K into 20 million that way. You don't go to the track and put your $100 down and try to turn it into 300. After the race is already going, so to speak. And I mean that's the game they're playing
Right,
versus
right.
the game we're playing. We're buying the goddamn horse right out the mama's womb on a lot of this stuff, and that's the mama or them or the big horse in this shitty analogy is the whales. It starts with them, and that's
Yeah.
why I think I said it last week or maybe in one of my sessions, um, that I just recorded and haven't released. Oops. Um, that the easiest things for us to read and kind of where we started was no, actually said this to DH when we were talking this week. The where we started was like the shitty pennies because the whales couldn't hide there, and then you were like, well, they can't hide there either in the really big stocks, and
Yeah.
we kind of just channeled down the stocks we trade are the ones the whales can't hide in. And I think it's that simple, um, on why we're so successful on shitty stocks like Fastly or shitty sectors. Like a sector will come up and it'll just be utterly obvious that this is where the action's going to be.
Yeah, absolutely. And I even so right before earnings dropped on Fastly, I mentioned that one in QS in QuantumScape, and I was just like basically, I think we got some good entries here. You kind of want to watch what's going to happen, protect your neck, so to speak. Because they can move violently, and if you're holding, I was holding both of those the same size position, and QuantumScape went down 8%, whatever. Fastly, did what it did. So I was cool holding both of those, and they both have the same setup and leaps in effect in terms of how far out of the money it's looking, and all of that. So QS has had its day, will have its day, whatever. But I like where I'm at with it. I'll just wait, and that's what I did with Fastly before it went off. We had some spots, add some here, add some there, and get a size position I'm comfortable with. And we just do it. We just do it again. And I am always kind of looking for that. The on the a lot some of these sectors, the solar is a perfect example that um, you don't really want to be late on solar when it pops and has this a significant move, and Enphase went past 50. If you added that over 50 and you're sitting here right now and it's 43, 49, it's not like it just the position's dead, it kills you, but you might be here a while. And if you're going to average down, you're in kind of a shitty starting spot to do that, and you just you can't. There's no reason to trade these like that. How long was Enphase under 36 bucks, and how long did you have to just figure that out? And even if you just wanted to wait at that spot and say it's got to prove itself here, and then you get in, you had a couple chances to rinse and repeat, and then it has the huge move. So no, I mean I'd rather have an average of 32 when it gives up 50 and falls to 43 something, than an average of 50 and then you're stuck, and you gotta average down and map that onto Roku, Snow, MDB, whatever. I had people ask me about buying MDB when it was $450, wanting to buy 600C on the thing, and it's you have to.
220 was better.
Yeah, right. And so I think people when they get into this, you got to ask yourself what is really driving that desire to want to buy this now, and it's that FOMO. And um, I like to study the quiet setups. You don't, and there's a difference too, and this will I want you to talk about your downtrend versus uptrend thing, but there's a difference between a stock that had a big downtrend, has some stability, shows some signs of life, and then something that's just kind of dead and just keeps is just doesn't really have any hope, the no floor kind of thing. There's a lot of no floor trades that you mentioned to me where the flow does end up working out, but it doesn't if it doesn't meet our checks, I don't really like to go into it. Even if I'm like, yeah, this flow is probably going to go, but I'd rather have one where if it doesn't go right away, it's still going to hang around the levels, and then you can plan what to do. So what was your thoughts on the downtrend versus uptrend as far
Well,
as
I want to get one thought out of the way because it fits both what you just said and
yeah
what we're talking about here. But the honest today, um, with these people out there in Twitter land, because they piss me off all coming out of the woodwork. Um, but if I was out there doing this by myself, creating content, trying to make a YouTube channel and a X channel and do all the revenue stuff that those fuckers try to do, so I could fund my account and trade. If I was doing that, I wouldn't want to share that revenue with the professor, so we wouldn't be working together. And that's a lot of these guys' mentality. Um,
yeah
but I also know, and I've learned that I'm 50-50 probably, right? On just take all my research, it's probably 50-50, 6 out of 10. But when you add the extra check of does it line up as well on the professor side, that shit goes to 8 or 9 out of 10. So um,
yeah
working from both angles and having those checks very very important. And how that relates to what we're going through now. I mean, there's a lot of time. I'm a little more stubborn on that statement than the professor through the years. He'll just buy shit because he believes in what he sees.
yeah
Where
yeah.
where I kind of need the flow in most cases.
Well,
And if not, it's
yeah
a really quick trade for me. And the quick trade comes down to the TA. And the first thing I look at on TA, and you can't do it on a fucking 5 minute chart. And a lot of times when I get in these rooms with people and we're doing one on ones, they got me all, and I just have to be polite about it. But trust me, I'm screaming in my head, get off the fucking 5 minute chart. Will you give me some history here so we can talk about this? Like, I don't care what happened on Tuesday. I just don't. I'm here for the story and the long haul. And the uptrend or the downtrend is the most important part of that. Is the stock in an uptrend? Is it a downtrend? Is it close to the last high? Is it close to the last low? Like, where the hell are you at on the roadmap? And we've just been trading since like April, that April flush. We've been trading an uptrend. And at least from the share side, real hard to get bagged in an uptrend because stocks are
yeah
continuing to go up. It's harder to buy for some people in an uptrend, but then you get this pivot to where you're getting separation and divergence, and we do have a lot of stocks in downtrends, and that 3 candle rule is the number one thing I look for in that situation, so to speak. And to be honest, if there's still uptrends around and available, I'm just going to trade those. I'm a share trader. Why would I even mess with anything trying to catch the bottom or the knife, especially if it's, let's say, a $20 stock now and it had range to 50 or 60? As long as I
yeah
catch it before 30, I'm fine. Um, but we're in that market where this rotation that we're going to talk about is going to get people thinking some of these are just great buys because they're red. And we have kind of preached a little bit of a red candle is your best entry. Yeah, in a
yeah
market that's bullish and in an uptrend, that's the fucking fact. Your best entry in a downtrend market is the third candle over that's still green, that's holding the level. And that just takes time, and you have to switch to a DCA mindset. And I'm sure you got a lot to say after all that.
yeah. So first of all, on the when I do buy something when the TA isn't quite there.
In
Couple
face.
situations.
In
Yeah, yeah,
face.
yeah. Well, yeah. There's a couple situations where that happens. One is when you have some level below, and I'm like, yeah, he's probably right. That's going to hit that, but I want to get started anyway. IonQ was that, and
Oh, yeah, that one's, yeah,
I
yeah, yeah.
yeah, I was a couple bucks early on that one.
Sure.
End phase the leaps were there, and the sold puts were there. It's kind of a little bit of an artificial floor, but I had I had the history with that stock, and so that's the time I'll do that. Or if it's a big sector story, and I think I'm just kind of early on it. You Amy was the one that now that one, to be fair, like the read on it was it went from having like $2.50 strikes to they finally added like the 50-cent one, and it became easier for me to read or whatever. But I even the flow wasn't that particularly good. It was just that it was the rare earth thing, and just looking for those, and just having something to buy along with MP, and so I do at times buy a story, but the one thing I'll say about all of those where I buy early before the TA shows up, you can just wait for the TA to be right, and then you can just hop on then, and you didn't have to deal with owning it for a couple months early, like I did. So it's one of those you don't you can go either way, but those names usually do come around, and the same is true for the ones you bring up with TA, and then the flow comes later. It doesn't happen with all of them, but we've been at this long enough where we kind of know which stocks are going to do that, and I don't trade a lot on this anticipatory flow, but um, you start to see which ones are gonna do it, and those get watch listed or whatever. I don't like the Twitter narrative of where they'll just say they're watching something, because what that means is that when it goes if it goes up, they can point to that tweet where they said, "Oh, see, look at this. I was watching this." And if it goes down, they can just say nothing. Um, so those guys, like, it's not they're not the ones who like delete tweets about things, but they're sort of tentative in their putting their support behind something. Whereas we have a more stable process. We make a list. You can run that list against the AI these days, and got the timestamps, got the proof on it, and got the buys to go with it, and back it up.
Collabs are actionable. A lot of people miss
Yeah.
that, but I mean
Oh yeah. Yeah.
that's from me. It's and a lot of it is a rotation or regurgitation. I mean, it's because hopefully people are staying on those names, and then I mean, I'm one of those people that do stay on those names. That's why they keep coming up. So,
Right.
and then understanding, again, another it's through a conversation I had, understanding like the actual plan. And a lot of people's plan is just to go to the moon, and you better be in an uptrend if you're going to the moon. That's for sure. And you better
Yeah.
have a good thesis and all that stuff too. But if not, 10, 15, 20% is very available in this market. So and having several irons in the fire, so to speak, is just the way to go. And kind of got off the downtrend and uptrend stuff there though. But yeah, stay on the stay on the uptrends. If you're looking at a downtrend, give it the three candles or off a
Yeah.
level. You can trade off a level. Mara was that. Um, sure.
Well, the yeah,
Go
so
ahead.
the uptrend thing, like it, these the all time high charts that I've been trading for years now, and they are the one they just don't really they kind of just don't stop. It just kind of keeps going, and Duolingo was like that, and Wing was like that, and and then both of them had the big pullbacks, and um, they kind of set back up. But one thing I'll say that what you don't want to do is, I don't think it's good to take the big sector winner, and then the concept of um, a lagger, like a company that does a similar thing, but has lagged behind in the stock price for whatever reason, and it's like, well, I'm gonna pile into this one. And I mean, sometimes the sector winners, they're the winner for a reason, and
They're gonna
the
win
sector
again. Last
they're gonna
five
win. They're gonna
preview.
keep winning. Yeah, why?
Last five
Why?
preview.
Right. Yeah, and I mean, a good example too, and this one has been great to trade, but you know, you don't watch people win big on Uber and then say like, oh well, Lyft got left behind, so I'm piling to Lyft, and then just keep Lyft the whole time. Whereas Lyft has had the pop and fade, and and set back up like that. I'm going to be an investor in Lyft, and EV was like the next Tesla. That was the big thing, and I mean how those people doing? Whereas Yes, I mean Rivian. I just did well on Rivian. I didn't expect to this week, but but it's different. It's not you're not really trying to um, replicate something that the person who won the company that won the big market share. You're not trying to just replicate what they did. You're trading a different setup. So I don't like the laggers. I especially don't like it on the real the real short time frames. That the market, they forgot about this one. Everything else in the sector is moving, and they forgot Virgin Galactic. I mean, look at ASTS and all them. So I'm gonna pile into Virgin Galactic. Like, you don't understand anything about the company when you're throwing darts like that. That's not how sectors work. So I didn't even plan on this rant, but that just kind of came to mind. That's just not how we do things. It's not a good way to live.
Yeah, I'll try to kill two notes with one stone here.
Yeah.
Yeah, and you got that. And sure a big topic we're going to have over the next few weeks is sector rotation, and the one that's glaringly obvious to me is the AI rotation, and it's not really a rotation out of AI; it's just a rotation in the story. We went from how are we going to power this? We need all the parts, and now we're in the secondary step of that. All right, whose jobs are we going to take? I mean, that's not a good scenario or thesis, and that's where for me that's why the software's under the hit first. And
Yeah.
does that continue, and where do people go from there? Because money needs to someplace to go, and stick around for next week's episode to find out, so to speak. There, but one chart that really stood out to me, and what I think you're looking for, and um, if you are that kind of like slower long con, you want to buy into things, you need to find an emerging market or a very unique product, and then just kind of hang out until the world sees it, and a chart runs out of sellers. And boy, has Sphere run out of sellers. There's just
Yeah. Yeah.
non-existent sellers on this chart. And uh, the reason I'm bringing it up is not for an entry, not anything like that. If you got some down there, 40, great. If you fucking bought when it was real low, even better. Um, but it's not about company evaluation or anything. It's just lack of sellers in the market on this thing, and that's a lot of what drives stocks. It isn't really the fundamentals lately. And if you watch the talking heads on TV, it's it's really not a fundamentally driven contest, or maybe there's less emphasis on that. It is a popularity contest in the end. So um,
Yeah.
the the farther you get away, you're probably seeing it with Carvana now. They will go back to the fundamentals. Some money will move on. Hard to get money to move back in when you're overvalued, but the name of the game right now is finding that innovative tech, and Lemonade and Root probably a good example of that too. So I mean, if
Yeah.
that's really what you're thinking, or if that's really a problem for you holding on for the bigger part of the stories, or thinking this chart could just go to the moon, run yourself through that why it should be popular. And if it doesn't pan out, take the percentage. So yeah, that's gonna be a new Unk saying. If it ain't popular, take your percent.
Yeah, and Sphere. I mean, we knew about the potential for multiple sites, and I think they're going to put one on the East Coast somewhere. But
Yeah. Yep.
I mean, but that was known this whole time, and it's just the market reaches a point where it just decides to care about that. So a lot of these the flow set up here to 100 in the leaps was has been there, and they just parked there and kind of didn't care. Then they didn't budge when it started to move that way, and rest is history. But the I've seen it a lot these days where well, since we've been doing this, the flow setup is there. The story comes later. It's like I don't know what the story is going to be, but there's a story that's going to happen here. And U.S. Steel was like that. I remember someone telling me you can't trade U.S. Steel. It doesn't ever move. It doesn't do anything. And I'm like, all right, whatever. And the flow was there, and then all of a sudden, the buyout rumors. It wasn't even just the buyout. The buyout rumors started, and it popped, and then woke up, and people got into it after that. But I yeah, I like to find the big story, and just seen it so many times. And as um, the big one thing I will say, when the big story is negative, which with AI it kind of is, the sentiment against AI. I mean, it's kind of a funny thing. I mean, everybody's using it to make their funny pictures and videos and stuff like that, and everybody's got the Chat GPT and all that. But it's sort of trendy to be anti data center, and and then alarmism about the job market and what it's going to do. And you have uh, both sides of the aisle speaking out against it. Ron DeSantis, and then to Bernie Sanders, or whatever. And these bills about nefarious things people do with AI, and banning all that. And then the companies starting to potentially have cash flow issues, and the potential that two of the big ones are going to IPO uh, into a cool period in the sector rather than a hot period in the sector. And that is a huge opportunity if that happens. That's how I got a good entry, or we got a good entry on ARM, was that it IPO'd and popped and faded heavy, and then it was like a no brainer to buy the thing. So with OpenAI and the other one, like I am very much looking for that setup. And same goes for prediction markets. There's two stories happening with that. The prediction markets are pummeling casinos. The perception of what that thing means for them, and them trying to figure out how are we going to do this. And the same exact thing happened in software with AI. That, like, how are we going to actually use this, make it profitable? Snow's biggest downtrend of late was due to that. Same with MDB, where MDB dropped 30% in a day on earnings and all that, and DraftKings just had a huge drop or whatever. So the way that IPOs can re-energize a sector, that's the biggest story with IPOs. And then the individual ones, you don't really want to be early with those. You do want to, like, let's let this thing let's this thing set up. And what this setup I hope for is pop and plummet, and then we go from there. So so you'd mentioned IPOs. What's your take on those?
Oh yeah, no, it's more of a current state
Oh, okay, got of the ones that
IPO.
are out, not the.
Yeah,
Okay, yeah,
yeah. Which no, I like what you said about the emerging markets. I think that's spot on because that's a big piece of kind of what I think is missing currently in what's out there. Um, but again, just it's just talking with people and those charts looking good. Um, what the just got to be blunt when I say this, but no one owns that shit. Right?
yeah,
Like it's brand new in the market and no one owns it. And if they don't step in right away and take a big chunk of it, it's kind of left out there to dry. Like there's no one to defend it. And I think that's missing in a lot of things until they see value. And the one that stands out to me right now is Chime. Just because it's not in an emerging market, it's in probably an oversaturated market now, right? We have five or six of those traded, maybe seven or eight of those traded,
yeah, yeah,
depending on how you define them. And then if you agree that the banks can do the same thing for them, right? But you can use a bank. It's even more diluted. So yeah, I think IPOs right now are the ones that are currently out there. Like the insider ownership, the share structure, all that is just. I think it's too big of a risk for big money just to kind of set up shop in them so that they stay in what they already have, or they're keeping their positions and the pieces that are already on the puzzle, because none of those guys that are stepping in the market are have let's say 10% of the market share. They're just kind of another small fish out there that have a good name, or maybe a good catchy commercial that people heard. And that's what makes Sphere different to me, is who's their competitor. Maybe IMAX. I mean, but it's
yeah.
that's not the same plane. That's not Adidas and Nike. It's not Coke and Pepsi.
Right.
So for me, it's IPOs that are out there, and it might be biased, but you might be. I mean, correct me if I'm wrong. But I might be biased because I don't have the history until the chart gets 3 to 4 year down the road. So
Right.
I am purely trading on fundamentals and technicals and the flow.
Well, Chime I think has the same winning formula that like Lemonade had, where um, they already have a pretty big market share of people, not really like well established people, that they don't really own houses yet or anything like, and but they get they get a job and they have this this neo banking thing. They got this flashy little app and it gives you your paycheck a couple of days early without charging you payday loan rates or whatever. You pay $10 or whatever, subscribe to it, all that stuff. But the idea is that that those customers that you keep them, and that they won't go over to the the old school banks. The same thing happened, with the investment stuff, and Robinhood's staying power um, is based on this. So when your comment about um, what's popular, and the things that are popular with younger people, or will be, or potentially will be, is always something to look at if you want to stick around in a stock. And the leap look on Chime that runs 100% out of the money or whatever is very much a bet on that happening. And I think that that's part of another, the big emerging big story that we all had a chance to be pretty early on, was alcohol. Um, Sentiment on alcohol being so low, my just sort of inclination that it's gonna come back and rally and be popular again, American Renaissance or whatever you want to call it. That those names are gonna cycle back around and benefit from that. And I don't know what the IPO version of the stuff with the alcohol is, but that one was more like your kind of traditional names, your Budweisers and hard liquor names and stuff like that. Uh, but again, I mean, it does cycle back around to that popularity, and then the big dogs, reading how they're going to get in on it is important too. And last I'll say on that, Apple and AI is one of the more fascinating things about this whole era of the market, that a lot of people, like, you look at Apple and it's like they missed the boat on AI, or they really screwed it up. Well, look at how Microsoft is perceived right now. With They kind of botched AI, and they pushed it too hard, and Copilot and all of that, and it gets memed to death, and everybody remembers the paperclip, and this is this iteration of that, where Apple hangs back, and then they step in, and then they act like they invented the thing. That was the BlackBerry to iPhone deal that happened. And so Apple's relationship to AI is going to be important to watch, just as IBM and Quantum, or Honeywell and Quantum. That was important too. That they were working on it. They did it a long time. But once that sector got hot, those stocks had great entries, made a move, and became great investments. And now I don't ever have to sell IBM if I don't feel like it, with the entry we got on it. So same kind of thing's gonna happen is with banking, and figuring out where um, Wells Fargo and Bank of America and J.P. Morgan and all them, like, how they want to respond to neo banking and payday advances and buy now pay later, is definitely a huge piece of the puzzle to watch in those.
Yeah, for me, it was real easy to buy key under the level and just hold on.
Yeah, yeah, sure, yeah.
Talking about some banking. Um, One note I wanted to get out there, because I said it before, and I want to say it again because you want to say it before it happens, when you're in it, and after it happens. That's how I like to operate. Um, but
Yeah.
20% moves year to date on stocks. We kind of talked about that, like that being a thing. But the actual range on the stock, probably closer to 50 or 100%, maybe
Mm.
then some. Kind of panning out, on a lot of things. I didn't expect it to happen quickly, but stairs up, elevator down. That is a thing.
Yeah.
Just wondering how you view that right now on a lot of the plays. Is it, yeah? Or do you think some plays are in trouble? Just overall, because a lot of things have had pullback that do have longer theses.
Um, yeah, I mean, I the big setup I look for, and that I am willing to face in something I like is when I see the whales the kick the can down the road, and at that point it's like, okay, I'm gonna start to move out of this sector a bit and maybe keep the best one. And that was what happened with real estate and Redfin, and it was like, okay, they're moving out of these leaps, and they just punted it another year. So I'm gonna have I'm gonna be waiting too, and that meant selling, trimming a lot of those positions quicker than I wanted to. Some at a loss or whatever, and definitely am I definitely am mindful of that particular kind of setup. We are in a point, and this maybe you'll get us into the oxen thing, where um, the 3-2 market, the two is having uh, some pretty nasty days, and days that stay down a little bit more than they used to. You're not getting the V recovery every single day, and the hedge plan on QQQ for me has worked really well. With the over 620, you hedge it, and then now we're sort of flirting around with 600, and then there's the spy version of that. The thing that I'm mindful of here is that you got spy pretty close to all time highs, and you have some of the biggest names struggling. Amazon's on this big losing streak. It's not a huge losing streak percentage wise, but um, it gets in the news that they're floundering a bit. Um, Microsoft, took a hit. Like, some of these are taking a hit on earnings, particularly in software, and that divergence where some of these big tech stocks are pulling back more than Spy did. You have to be mindful of that resolving to the downside rather than the upside. I think it's a big mistake to just assume that all these big names catch on and catch back up to Spy. So I think it's a time um, to be cautious, and I think you're going to see the term unresolved puts from me on things that drop on earnings, and it's like, well, it's got another 15% to go, um, and then those puts are kind of, whales roll to that. They're not really, they'll let those go to zero or whatever, but you have to definitely be mindful of that. So I don't see a lot of confirmation in terms of some of these names turning around. I think they're just gonna some of them are just gonna flounder for a bit, and key is to zero in on the best ones, the ones that really overdid it, the Netflix of the world,
That's
and
what I
not
thought.
just assume, yeah, not just assume we find equilibrium on some of those, but they'll flounder for weeks or months, and if you're leveraged, it'll screw you over. You want to buy some Microsoft shares, you're good, but yeah, I'd be careful.
I didn't really take that as an oxen comment, but I liked it. For me,
Yeah.
the oxen right now, we in consolidation. 3-2 Professor did say, but it's more of a 1-to-1 for me. And the downs are worse than the ups. I definitely agree on that. And I mean, why? keep it simple out there, people. Why? Well, shit's way up. You know, people are. Let's just say people are 2x on some things. You know, a lot of charts you can see it in the charts 2, 3x easy. And you know they're taking there's going to be some profit takers. Well, there's your sellers. Well, the buyer who's seeing these prices as a good value right now on some things, and you know that those two things, obviously the people taking profit are just a little dominated right now. I mean, it's not overwhelming. Um,
Yeah.
and for me, okay, fine. Who cares? Well, you find when that levels out on things that you want to buy, the good names, and you look for the rotation, and you rotate with them because you know the big money, safe money, and I mean that's what you do. And um, that's where I think we are. And um, I did a
And
little.
if
Go ahead, go ahead, go ahead.
Oh yeah, and I mean, if I'll just say like, if you want to avoid some of the whiplash of the 3-2 market, or stepping in what the oxen are putting down in front of you, you're going to be in coal, you're going to be
Yeah,
in
yeah, yeah.
ball bearings, and whatever weird shit I find, or
Food.
paper cups.
I think we're going to
Um,
food too. Food.
yeah, right. Yeah. So there's calmer waters during these storms, and that's a way to use the work too. And that was when things were really bad. That was what got me into oil and steel and all that stuff. So yeah, I mean that's I like these conditions for that reason, because those little flight to safety moments they stand out. And then you even have, there's a 900 something dollar grocery store stock that is going to benefit from these conditions too.
Sure.
There's a lot of opportunity, but if you're scalping Tesla weeklies, it's tough. It's tough right now. So
Yeah. No. Every
good
time
luck.
you bring up the oil and the oil and what steel from when we
Yeah.
started, and I was like, "Yep." And I was there holding y'all's hand on the $100 Tesla entries, telling you to be okay. Yeah, it's
Yeah.
finite
Right.
time,
Right.
and you'll
Right.
be okay.
And coincidentally or not, that play came up then. Food. I
Oh yeah,
mean,
yeah.
so and even Shake Shack, we started talking about that one back then, and here we go again. So
Yeah, good
um,
one. Um,
yeah, market repeats.
one more. I mean, it probably won't go too long of a conversation, but just so people know where the head's at currently, because I am early but forward thinking. It's kind of the yin and the yang of that. But I built a little screener over the weekend, and obviously all the exchanges, market cap 2 billion or more, because I didn't want too many pennies in there. Less than the 200 on the weekly. Forward PE 15 or less, and earnings per share year over year at least a 5% increase. So looking for profitable companies, low PE, undervalued under that 200, decent market cap. That's where my head's at right now. And that list came up with 115. Um,
Yeah.
Probably 35 we're already following. So that's where my list will start, with the 35 there, and kind of work out from there. You know, mess with those filters a little bit, but that's my foresight, is looking for the next target, because I mean Target just got down to 10, big name, um,
Yeah.
and just get an entry, and you can leave that alone. And um, for me, getting 4 or 5 of those a year, that really just helps the foundation of what I'm doing over here.
Uh, yeah, absolutely. And then I mean like I saw people uh talking Walmart, and it's like, I mean, that the time to buy Walmart was is not right now. It was a while back. And I say that saying, I mean, Walmart could go up 50% from here, but um it's a little tougher. And I mean, compare their PE to Amazon, just as an example of what you're talking about.
Sure, sure.
Uh, but yeah, no, I'm with you on that, and I do look a lot more at those those fundamentals these days, and but you know the those are good. They fit the DCA market that we're talking about. I mean, it's not like you find these great fundamentals on something, and it's like you notice it, um, and then it's like, well, I mean, other people see that too, and it's not necessarily what is going to move the stock, but at the point at which it starts moving, it's what maintains its momentum that it hits that uptrend, and it's like it's going to find that equilibrium in its fundamentals, and that's going to carry it through, and the flow is there, and the TA is there, and then it goes from there. But yeah, I mean, it is a really great way to begin to filter that, especially that kind of investment or long swing list. So yeah, I do look forward to those.
It's a great way to play 100 rounds of golf a year too. Just throw that out
Yeah, right. Yeah.
there. Yeah, and I was gonna catch you there at the end, but you brought the TA there. There's usually a level.
Yeah.
We're doing it with Netflix. We did it with Target. I'll give you a spot. Big window usually to get in, and I'll go from there. And yeah, you have the flow, which is usually for me, that's the timing, is the flow. If they're like, well, they got to get back out of here by March, you understand you don't have a long time in that zone, or if it's something that they're kicking the can down the street, but it doesn't move, you just need to kind of get in at the level and hold on. So
Yeah, and again too, and this is the biggest thing that people misread about flow, and I don't know who's going to hear this or maybe rethink what they're doing, but the existing open interest is as important or more important than the new volume coming in on so many of these names. I mean, yes, you need and want the fresh volume, but the volume is going to tend to move into that existing open interest. If they're just targeting some new strike out of nowhere, um, that's a different kind of thing. But it's not the most reliable setup is existing open interest in positions that could recover, and that they could do something with. That they already have, it's like the board game, and they already have a bunch of pieces on the board, and people decide to start playing again. They already got ways to maneuver with positions they already have, rather than fresh money. So a lot of those, like I'll say, like if they can get out of this contract, they will, and that's when you really see it start to take shape. So I don't know. People ignore that column. That they want the fresh volume in the weeklies, and that I see it all the time. They have a feature where you can share contracts, and they share the worst bullshit I've ever seen. I don't know what they're thinking, but that's like it's like the what not to trade version on that site.
mm,
That. It's just whatever other people are liking who are subscribers, like tends to not be what I would go for. But yeah, I wake up. You're gonna see that emoji quite a bit coming up.
yeah, it dilutes the brand if you let bullshit fly like that. In my opinion, but that's just me.
Yeah.
But let's go boring. I was trying to cut 10 minutes. We could probably get 5 of it off.
Yeah,
Um,
yeah. Well,
let's
those
go
will be
into gold.
quick.
Yeah, yeah, yeah.
So yeah, I mean, copper consolidation, some stability around here. Still some pretty fat candles. The you know, I guess finding buyers and sellers here. There's bigger range when it pops like this. So pretty good there. But it's not an easy. It's not a great entry for the big names on copper. I think there are some smaller cap aluminum is where I'd look, and some smaller cap steel. But
You
um,
probably don't want my copper comment, but I'm gonna give it to you anyway. It's making the news again on people stealing it, and maybe at $4, you only got 2 fentanyl pills, but at six you get three, and I guess it's worth it again.
yeah, no, right. True. I did like the people talking about buying physical physical copper was comical to me. That's a lot of weight in your garage, compared to gold or silver. So big old cube of copper sitting there in your garage. But anyway, yeah, gold.
Chilling. 5K.
Yeah,
Psych.
yeah. I mean,
Psych.
the way it popped back, the mid candle thing we talk about. Notice how that's exactly where it went on that big drop, and then you know moved higher and kind of went around there. So healthy to stay elevated, and then silver again. Where's the better opportunity? It's in silver. It's same, same kind of thing as last time with this kind of extreme move. It's one of those cigar bar sentiment things where people talk a little too much about silver for me to like it. That I don't like that much attention. It's like when the moment I knew I was going to be wrong on our little Bitcoin wager.
Which
And
one?
I'm right on crypto a lot on this.
Oh,
This
the 3223,
yeah, yeah,
123.
yeah.
Yeah.
Well, I knew I was wrong when retired Air Force guys were talking to me about buying Bitcoin
Mm.
when it was up at the top, and I had my level in sight. I'm like, yeah, it's probably screwed. I had some MSTR puts and was happy to be wrong at that point. But yeah, anyway, so yeah, the word on the street. Silver's a little different because all those guys like precious metals before that. But anyway, might park here a while, but silver's $100 asset. The real price on it is that, so it'll have that move back up. It's just a little harder to trade than what we had before.
Word. What's next?
Right. Oil.
Okay.
Um,
Chilling.
yeah, chilling. I mean, it's healthy. Low 60s is good.
Yeah, I like it.
Again, you don't need some big spike to $90 on this thing for the stocks to do well. So, still like a lot of the setups there. Still keywords, pipelines, exploration, all that.
You
Um,
you should already be in oil. We cover it regularly, but
yeah,
if the Iran shit start being the lead story on the news, which I don't know how it kind of isn't already, but if it does, um, yeah, that oil will be active in that environment. But I mean, we're already in it and it's already moving. So yeah,
yeah, definitely active in the sense that there's some pre-market sales you can do. So like if Oxy pops 8% overnight one of these
yeah, there
times,
you go.
I'll trim some off.
Yeah.
But yeah, you never chase geopolitical moves in oil. That's
No, no,
you
you should
front
definitely
loaded.
sell that fat green candle a little bit.
Yeah, yeah, yeah. And natural gas manipulation, whatever. But I like it here. I mean, anything setting up in the lower threes, um, it'll make a move to test five again, and then the key with it is holding five. You're not going to hold five based on the weather trade. Oh, it's cold weather, so natural gas is gonna spike. It's gonna be something else. But I continue to scale in for the long haul and trim on the pops and all that. But yeah, the natural gas story, we're still very early here, I think.
Mhm.
All right, then just a couple more. 10-year candle you don't want is what we got. So you got you'd like to find some equilibrium here at 4.15 or something like that, 4.2. Um, so yeah, you'd like to see this stabilize again, but it happens before a long weekend. Not the biggest surprise. Friday was this total algo day, and everything was just picked a direction and kind of stayed with it for the most part. And then Bitcoin, real quick. Yeah, you have coin coming off of their worst earnings report of late, but moving up you know, 10 to 17%. Like start at 10 with 70%. Why? Well, because it had been taking a beating for weeks, and the priced in bullshit comment, I mean, was relevant there, that it kind of popped up. But yeah, I mean, Bitcoin setting up here and staying in the below 68 to 72 or whatever for a while, longer the better. That's probably what I would say here. Is I threw a couple jabs at crypto, but lots of time down here, and that would be very good for swing trading. My take on crypto.
Yeah, 72 resistance is what it's looking like, just where we are. So.
Yeah. Yep. All right, so that's it for me. Except I will ask you, just hold me 1 second. I'm going to do a quick spy look to. Yeah, there it is. All right, so it's 6:30 and 6:40 for June, with no companion of note. So we're still there. I would say 660 is probably the number.
Yeah, it's where the SMA was at. Well, the SMA is at your strike, which is probably why they're there. But you've
Yeah.
just been living, and it's really more like 675. That's been the bottom of these last month candles. Really weekly wicks. Don't do that on SPY, but any other chart. But I mean, there's your floor. You can kind of see where it switches, and it's 675 is defended. So I mean, if we go below that, it's probably gonna flush down to six. I mean, that's
Yeah.
when 660 comes in quickly. So, the same thing you said with crypto. Here, the longer the better. But I'm a month in of saying it was scared of 700. So it's just scared of 700. Price discovery or whatever you want to call it up there. Probably get some FOMO into it when it does happen. Um,
Yeah.
but where does it happen from? But good overall market. I mean, SPY's healthy for what's going on. SPY's pretty damn healthy. I mean, look how far we're still way away from the 50. April low was 480. We're $200 above that. Quick math on that. It's like 40%. So,
Yeah, it's a good time to contextualize the despair that you see. Those guys have zero DTE options, so yeah, they're blowing up, but the market's not blowing up.
yeah, I mean, it's kind of where we've been. Instead of talking SPY, where's the market at this week? And I mean, look at the last like 4 or 5 candles. You're probably there. I mean, red or green, whatever. Um, I could probably just use 680 or 685 as an example. A 3% up to 685, you're going to feel one way, and 3% down to 685, you're going to feel a different way, and both are highly likely this week. So learning to
Yep.
trade around that is more important for me than anything, and understanding the range of the chart, and find charts that move to their own drum. Fragmented market, fragmented sectors, style of trades are very important right now. If you're trying to buy pullbacks, you need to wait for 3 candles, and if you're playing TA bounces, you need to be a little faster on both sides of the entry and exit. So just kind of know what you're in, know what you're trading, and for me, that DCA, good levels DCA right now is where it's at.
Yep, and read those earnings reports. Look at guidance in particular, and that's going to open some things up for us too.
Yeah, I got a couple of them. You ready to get to work?
Yep. I'll grab a quick coffee and we'll get to work.
Perfect. Like and subscribe, people. Link somewhere.